Good morning from Chicago traders. It's 8 a.m. My time on Monday, the 9th of October 2023. This is episode number 2554. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How's the sound this morning? Just a quick mic check. Thank you. Let's jump right into it. Both feet. The main headline, of course, is the Middle East unrest, the violence that's going on between Israel and Palestine right now. The overall market sentiment's risk off. There are no key earnings this morning, but we'll kick off the earnings season tomorrow with PepsiCo. PepsiCo is supposed to report early, I think. PepsiCo is pre-market. LVMH out of France, Louis Vuitton, they'll be reporting at the close of the European markets or sometime in the middle of the day. And then for the rest of the week, because it's Monday, we like to look at what's going on for the week. The rest of the week, we have U.S. PPI on Wednesday. We have the FOMC minutes as well. We have Thursday, we have Great Britain's GDP, U.S. inflation, Chinese inflation, and balance of trade out of China as well. And Friday is the Michigan sentiment prelim number, expected at 67.4 at 10 a.m. on Friday. But also on Friday, we get... before the market opens, we get a whole bunch of banks. We get JP Morgan, Wells Fargo, we get Citibank or Citigroup and PNC. Also, we get United Health, which is an insurer, as well as BlackRock, all on Friday. So Friday's just full of action there. So what do we have? We have... another piece, bond markets and banks are closed in the U.S. today. Today's a holiday for the bond markets and the banks. You could see that from our sheet here that the auction condition is completely balanced. The market's has gapped down. It's pretty much been sideways since. Commodities are responding. You could see crude oil has had a 4% pop. Crude has been pushing higher. The anticipation here is that this Israeli-Palestinian problem is going to then escalate into some more issues in the region, especially since there's a lot currently going on that is working towards putting Iran in the center of this. As the supporter of the attack on Israel, the rockets and so on. So if that happens, then we have further escalation. This is something that's probably going to take weeks and months to resolve. We'll see how it unfolds. Looking at the S&P so far is balanced in the overnight session. We've really done nothing for the session. The volume's quite high, 271,000 contracts, where the expectation is normally between 170 to 190,000, and then the inventory is 100% short. In other words, all of the volume that took place in the overnight session occurred below Friday's close. The inventory is 100% short with the range of 23 points, which is basically normal for this product. So that's where we stand. The point of control 43.10, holding above the 4,300. The overnight session tested 42.9950. If you recall, we'll look at that. We had a really hard time getting above 4,300 most of last week and holding above 4,300. We would get into 4,300, check for liquidity, and fall right off until Friday, where we pushed right through and we continued to trend higher. So this is this is the layout for today. You could see there's a pop in the 10-year futures, and that means there's a drop in yield, and there's also There's also commentary from Fed's Logan, which was due this morning at 9. Fed's Logan says continued restrictive financial conditions will be necessary to bring down inflation. In setting policy rate, Fed must take account of financial conditions which have tightened substantially in recent months. This is a voting member of the FOMC. So let's get to the charts. All right, so we were consolidating for a few days there in the S&P, and we ended up with an inside day and an inside day of an inside day. So these are narrow range days, 2 days in a row, and then we ended up opening at the low end of the range on Friday. The expectation on Friday is that it's very likely to test higher and fall below and then just basically sit sideways through most of the session. What it did is it tested down below the last few lows. It missed the 42.51 quarter low by a tick, and then it started to rip up on what turned out to be a strong trend day up. If you faded this, there were very, very clear clues early on in the day to not fade it. We did push through to 43.15, which is the point of control in this area right there and right there. Secondary point of control, I think it's 25. There are multiple prongs here on the volume profile, 25, 26, something like that right here. But it ended up pushing through. Let's take a look at what kind of action we got on Friday. Here it is. Very, very distinct behavior on Friday. We saw the market push up, do what was expected, which is to push higher, and then most likely fail to continue, push to the low side, potentially check the overnight low. What we did get, though, is we got a struggle at the low, and we got a higher low that created an impulse, and then from there, it pretty much started running. You can see the pullback to the IB, and then it's a classic trend day up on Friday. Not much to say here other than it was a pretty well organized auction on the way up. You know, they would get higher prices, consolidate, break through, pull back to the consolidation, continue higher. Again and again and again, we saw very obvious zipper breakout patterns throughout. Just the whole afternoon was just that. So that's where that stood. Friday, the IB is down here. These yellow lines, you could see there multiple times the IB on the way up. You could see also that the point of control is the upper end of the range. This qualifies completely as a trend day type, which historically only occur about 20% of all sessions in the S&P, something like 18-20%. A classic trend day, meaning double the IB, more than double the IB with the point of control and price finishing at the upper quartile of the range. That tells us that the trend is in play. But what did it do really? What it did is it brought us out of this 3-day consolidation. It pushed through last week Monday's high, but we're still in balance in the S&P. We're still in balance. The news this morning brought us down. You know, we ended up gapping down about 40 points or so, or 35 points down on the open on the news, the Israel-Palestine news. But overall, we just haven't accomplished very much. Today, I'm not expecting a lot of action. Now, remember, the banks are closed. The Treasury market is closed. The cash treasuries are closed. And I'm not expecting a lot of movement. Looking at the NQ, the NQ has done a much better job. The NQ has put in a higher low, consolidated for a bit, and then broke out, filled in its its gap zone. The NQ has pulled back into the balance range here. Balance range is 15, 50, all the way down to 14,650. That's our balance range. Point of control right here at 14,880, something like that. And you know, it's above there, but the same kind of story today. Not expecting a lot of action. We've had a very, very wide-ranging day, and we are well below the top of it. To me, it looks like it's likely to just sit sideways for the rest of the session. So this is a good day to kind of again just kind of take it easy. Crude oil. Crude has absolutely blown through the levels that we had talked about, 87.5 or so, has filled in this low volume node, has run, and the expectation on crude was 80, but which it was doing very well. We've had one-time framing down all the way through, one-time framing down. So barring this news, the expectation with crude is to open down here, squeeze lower, and get us to the 80 station. But this morning, crude has popped higher, is trading in what is an open auction. Crude opened at 85.95 or so, has tested up into the, what's the high here? 86.26, something like that, 86.27. And is testing down. So crude is very likely to be responsive, expecting crude to just continue to trickle down towards to fill in the gap. Not very much, though. Look, I don't have very much to say here. The relative delta is not giving us too many clues this morning. We do have a market that's been lifted. We are above the full session VWAP here. You can see a pretty good battle there. So it looks like it wants to climb back up towards Friday's key action areas of 43.30 and then all the way up. The point of control is at 43.42 and prior settlement is around 43.41. So it looks like the S&P has an inverted head and shoulders type of formation here, and it looks like it might target higher prices, and the delta is squeezing higher with pretty good participation from the very large lots and large lots. That could all change when we open, but overall, I'm expecting the market to kind of grind its way up to where it was balancing on Friday on the close, but not much more than that. I'll leave you with that. I don't have much more to say. Good luck today, and I'll catch you tomorrow morning. Take care.